Hello again, everyone. John Flynn here from Flynn Real Estate, serving Southern Ontario. I'm based out of Niagara Region, here to give you my professional and honest opinion regarding the 2022 Canadian housing market. So I wanted to take a look at the rest of the world this week to see what's happening and if it's just Canada or other places. And it was pretty interesting what I found, so let's get right into this and check it out. Starting in China. China slashes 5-year mortgage rate as property crisis deepens. Central bank equals record rate cut in May, but move unlikely to resolve crisis for developers, strategists say. China to offer special loans to troubled property developers. As China economy stumbles, home buyers boycott mortgage payments. In more than 100 cities across China, hundreds of thousands of Chinese homeowners are banding together and refusing to repay loans on unfinished properties, one of the most widespread acts of public defiance in a country where even minor protests are quelled. Just in case you don't know, in China, what happens is, well, for many, I don't know if this is common practice for all, but when you buy a property, like a new build, a condo and whatnot, you start paying the mortgage right away. And therefore, the builders and the construction companies have like 100% of the proceeds to complete the project, and what they've done is they've moved on to other projects without completing those, and of course left those unfinished projects without funding. So yeah, these buyers are now like, we're not paying you guys. Like we're paying mortgages on homes that were supposed to be complete, like fully. There's not their down payments, it's full payments. So anyway, they're refusing to pay their mortgages. So they're in a real bad predicament right now, the banks and the developers and even the Chinese people. So not good. We'll see what's going to happen there. On to the UK. House prices drop for the first time this year, says Rightmove. Although interest rates are rising, which would increase the cost of a mortgage, it says seasonal factors were key to the drop in prices. So what they're trying to say is summertime sales are slower. Nothing to do with the rising interest rates like the rest of the world, as we'll see a common theme now. House price crash warning. Juggernaut sharply slowing as frenzied market to collapse. Britain's housing market has been branded a juggernaut sharply slowing by an expert as prices falling amid inflation leads to fears of a crash. Fears for UK housing market as latest data shows sharp slowdown in price growth after mortgage costs rocket. So again, rising mortgage costs, rising interest rates having an impact in UK right now. On to France. Couldn't find much on France, but I found this. Slowdown ahead. 5 French property trends from latest Notaire data. France's Notaire network warns of a potential property market slowdown linked to high inflation in the coming months. I don't know French that well. I probably didn't pronounce it right, but anyway. Back to Asia, South Korea. Analysis. South Korea's sudden property slump tests world's most indebted consumers. Seoul, July 29th from Reuters. South Korea's property market has abruptly gone from sizzling hot to floundering, piling pressure on some of the world's most debt-saddled consumers as the sector experiences the fastest interest rate hikes on record. Prices of Seoul apartments last week reported their sharpest decline in 26 months, while transaction volumes in the capital dropped 73% in June from a year earlier. Again, rising interest rates, right? Australia. The Australian property market is falling. Should we be worried? The most important fact in the economy at the moment is not record low unemployment or even record high inflation of 6.1%. It is house prices, which, as the below chart shows, are suddenly falling. Australia's housing downturn accelerates. In Sydney, sharpest price drops in almost 40 years. Sales volume plunged in Sydney and Melbourne. Rate hikes bite, yet the Reserve Bank of Australia just started hiking. All right, now on to the USA. Housing market faces growing risk of multi-year collapse as new home construction craters. Home sales fell nearly 6% in June as housing market slides into a recession. Sales of previously owned homes fell nearly 6% in July compared with June, according to a monthly report from the National Association of Realtors. Sales dropped about 20% from the same month a year ago. In terms of economic impact, we are surely in a housing recession because builders are not building, said Lawrence Yun, chief economist for the Realtors. Zillow. These 30 housing markets saw falling home prices in July, but don't call it a housing crash. Yeah, don't call it a housing crash, guys, whatever you do. We already know what's happening in Canada if you watch my videos, but just the latest news in the last week or two. From RBC, monthly housing market update. Bottom still a ways away for Canada's housing market. Again, all the links for all of these reports are in the description, so check them out and read through them at your own leisure. Ontario and BC, from hotspots to downturn epicenter. It's pretty big words. TD Economist says Canadian real estate markets fall from grace isn't done yet. Based on early readings of transaction data over July, we are expecting to see peak to trough decline in prices since the first quarter to continue to push towards our forecast of 19%, TD Economist stated in a summary of recent events and what's to expect ahead. And lastly, steep price drops will bring sanity back to housing market in 2023, Desjardins. Desjardins is forecasting the average home price in Canada will decline by 25%, nearly 25%, by the end of 2023 from the peak reached in February of this year. In its latest residential real estate outlook published on Thursday, Desjardins said it's expecting a sharp correction in the housing market, adjusting its previous forecast that predicted a 15% drop in the average home price over the same period. They had originally said 15%, which I was like, wow, these guys are only 15%. Like, I think we were at that point by then. But let's read the top paragraph again because I want to be accurate in what kind of data we're looking at. Desjardins is forecasting the average home price, so the average home price in Canada will decline by nearly 25% by the end of 2023 from the peak reached in February of this year. So it was pretty clear they were saying the average house price in Canada will decline from the peak reached in February. Well, in my last video you saw last week, I don't know if you remember, but we were down 22.9% based on the national average as reported by CREA, which they didn't post that month and I had to go back and make my own. Anyway, I gathered all the data and there's a couple of things I want to point out from this graph here. If you check it out, you'll see in February, I think it was about 816 is the actual number. We were down to 629 on the average or on the national average residential price. And that's 22.9, so 23% were down. I don't know if they're talking about a year over year. They didn't specify that. They said from the peak in February. I don't know who's writing these reports, but that's only 2% more by the end of 2023. Anyway, you let me know what you think in the comments, but I think it's going to be more than a 2% decline from now till the end of 2023. So yeah, let's check this article. August 11th, 2022. 11 days ago when this article was posted. So 25% from the peak. Well, we're already at 23, like I said. Anyway, it baffles my mind. One thing I wanted to look at this chart, and again, I got all these numbers from the individual monthly releases from CREA on the National Housing Report and the statistics. If you look at where we are, you have to go back to find a national house price close to this. You're going back to January, which is just a little bit lower, of 2021. So that's like 18 months back. Our national prices have dropped to an 18-month low at this point, which is crazy. Like, you don't hear that statistic anywhere. But I just compiled this myself today, and this is based on the actual numbers in the releases. We're headed towards pre-pandemic. Look, it's 530 or something. We're at 630, another 100,000. So yeah, super interesting stuff. I thought it was very interesting that we're seeing the same trend around the world now. House prices, real estate sales slowing, house prices dropping, and all to do with interest rates, right? Everyone's raising their interest rates and it's cooling the markets. So it's a very common trend, and I don't care where you look. Now, I didn't just cherry pick these articles. Please, if you have an article that says otherwise, post it in the comments. I'd love to read it, but these are legitimate articles and there's tons of them out there. I just chose the ones that were the easiest to read and that had the easiest headlines to capture. So yeah, let me know if you can find an article that says the house prices are going up in any of these countries, because I'd love to read it. So okay, I wanted to now go over some comments. I said I would touch on some comments, and some of the top comments, in my opinion, there were some really great comments. Some of the best comments, they were very long, so I didn't want to go through them, and it was a lot to read. but I just wanted to pick on a few, and good, bad, ugly. There's really not too many ugly ones, but if there are, if it was legitimate, if I thought it was worth reading, I'd love to have the challenge to do that. Anyway, let's get into these comments. I got 5 of them from the last week. So Sarah N, fantastic video. Just a question on inventory levels. In London, Ontario, I have witnessed large amounts of terminations and relistings of the same property for price adjustments over the past couple of months. Would this significantly contribute to the rise in inventory we have been seeing this summer? If so, could this be obscuring the true level of inventory in all of the data related to the number of listings, just due to a duplicate/triplicates of the same listing under different MLS numbers in the same month? So great question. I want to kind of just look at how we view it and the data sets. So first of all, I just wanted to point out that you'll see here just near the bottom it says this is a listing from her area, from London area. It's an apartment condo. I didn't want to disclose any other information, MLS numbers and whatnot. And you can see there it says DOM and CDOM. I think CDOM stands for canceled days on market. But what happened with this listing is it's currently been on the market for 30 days, but it was on the market for 102 days total. So what they're saying is it was 30 days now, but they did cancel it and relist it. From what I can find out, it doesn't count as one listing. It still does count as 2 listings. So she has a point that yes, these relists do add to the number of new listings. Now this was from the same agent. I believe when it switches agents, it doesn't show the CDOM because it's a different member number or agent number. So here is a historical new listings chart from London St. Thomas Association going back to 2009. And you can see our listings did spike a lot in the last, or this year, and they have dropped. So our listings, our new listings, I should say, aren't anything obscure or dramatic. They're kind of in that normal range. Now again, those relists and duplicates and triplicates that Sarah mentioned, they do affect those numbers. Now, I'd like to point out that back when I first started my career, that happened too. And it's happened anytime the market gets tricky where you have to relist and prices are changing. It's always happened. So it's not like this is a new phenomenon and it's obscuring the data now. It's always obscured it. So let's just kind of get that out of the way. So one way to look at the data so that you're not looking at those duplicates and triplicate listings is number of homes for sale. So not new listings, just homes for sale in general. Again, chart going back in the same area in London, back to 2009. You can see that right now we are at low inventory of homes for sale. And also I'd like to point out, we saw the uptick in investors scooping up properties around the years 2014 and 2015, and you can see the inventory drop significantly because they were buying them up like crazy, and not just MLS listings, new listings that weren't on MLS. But you can see we've had a significant jump in homes for sale. So this is not obscured, this data, by duplicates and triplicates. This is just homes for sale over time on MLS, right? So back it up with some other information here. Another one we look at is months of supply, very closely related to homes for sale. We have still very low inventory in the London St. Thomas, only 2.5 months or so. And it has to go up towards 4 to be normal. And it looks like it's gonna head up there at some point. And just to show you the number of sales in that area, of course, sales are very low. They're like winter months low. And they're not all-time lows, but they're low. So again, listings are increasing, sales are decreasing. Okay, next question. Paul says, we have the debate. I like this one. The buyers aren't winning the battle. The sellers control the inventory and therefore control the price. So I think this all comes back to, is it a buyer's market or a seller's market? I think Paul would be correct in a seller's market where the sellers control the price and control the inventory. But when it's becoming a buyer's market, the buyers control the inventory, because if the buyers aren't buying, which a lot of them are on the sidelines, they'll control the demand, which will control the market more. So it depends. Sellers could control the inventory, but the buyers right now, I believe, ultimately control it. Anyway, let me know your thoughts in the comments about that. It was kind of the theme of my last video. Great point by Paul, but I disagree. From KitLap, thanks for the great video. Great info as always. I made a bet with my coworker that the average house prices will be lower on January 2023 than today. What do you think of the odds of me winning that bet? Thanks. Desjardins is going to back you up, and looks like Royal Bank's going to back you up, and TD Bank's going to back you up from the articles I just read. So I would say the odds of you winning that bet, probably 80 to 90%. Nothing's 100%. Who knows? Something could happen. Another pandemic, or the feds or the Bank of Canada could drop their rates back to 1%, or who knows. I doubt it's going to happen, but right now the odds say you're going to win that bet with ease. I'd like to know how much you bet, by the way. And from Ron Murray. Ron comments a lot, actually. Thanks, Ron, for all the comments. Thanks, John. Unlike most realtors, you provide unvarnished facts. With the high inflation print yesterday, 7.6%, it seems that the Bank of Canada will raise 0.75% just after Labor Day. That will drive variable rates to 5%. Remember that the COVID boom was facilitated by 1% variable mortgages. Current real estate prices do not square with the cost of borrowing. If the bank remains resolute in their inflation fight, which seems likely, then house prices will continue to fall. So again, I guess just like my videos, Ron just gave some great facts, and I fully agree with him, and it makes sense, right? So in the last comment here, I like this question because it keeps me honest. People are wrong all the time. I don't know if I'm going to be wrong on this. It's still not over. When the market was going up, sometimes I've told these people, or I've said, these people are crazy and they're never going to get that price, and they got the price, and I was blown away, right? So you can never say never. But in a declining market, you have to be very conservative with the prices. So anyway, the question from Fawad, sorry if I don't say your name correctly. What was the outcome of the listing you refused to take in your earlier video? I'm sure a lot of people want to know because you described an actual real experience. Thank you as always for the hard work and insight. So just a refresher, there was a listing. I'm not going to say the city or anything like that, but the seller wanted 1.35 million. I thought it was like worth 1.2. I would agree to list it in the high 1.2, 1.29, 1.28, whatever the case may be, with the premise that, look, we have to reevaluate. It's not that I didn't actually take the listing, but they didn't want to hire me because I didn't want to agree on the price. So maybe I didn't take it, maybe they didn't hire me. I just want to clear that up too. I don't want to say like I refused the people. They ended up listing for $998, which is of course way lower, but using the strategy that they're going to wait on offers and try to get their price, right? Because a lot of the Toronto agents and whatnot were doing this lately. So anyway, I wanted to watch the listing because I'm like, this strategy is old. I don't think it's going to work, but you never know. So I just checked right now, but yesterday I checked, it was at 1.26. So of course it didn't sell using the hold off strategy for multiple offers. So they increased the price to 1.26, which is closer to, I guess, what they wanted. And now I just checked again right now, and they delisted the property or let it expire or canceled it. So we'll see what happens if they're going to relist it, but 1.26 hasn't sold. Anyway, that's the market, right? You can't overprice listings in this market. So I guess the property has been canceled at this point is the answer to your question. Last list price 1.26 million, and we'll see. It was 17 or 18 days on the market total. So not a lot of time on the market, but probably didn't get a lot of action at the 1.26 and probably didn't get any offers or the price they wanted at the lower list price with the strategy to drive up the price. So yeah, this week I wanted to keep it simple, just some other real estate markets from around the world. Hope you liked it. And I'll be back next week with some more stats. So again, thanks for watching, and I'll see you then.